Alrighty, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Saturday, February the 22nd, 2025, year of our Lord, and of course, we are back to review the Dow Jones, the S&P 500, the NASDAQ, and coming soon, gold. We'll be adding gold to the market reviews. We'll be adding it to the top-down analysis, etc., etc. I'm working on oil as well, but that's later down the line. I still chart it. I'm just, getting all of my information gathered up. But for now, we'll be adding gold starting next week. Won't be reviewing it today, but we'll definitely be reviewing it in the future. All right, so let's start over with the Dow Jones, which is the instrument that I trade. As you guys know, I was under the weather on Friday. So I didn't really make a pre-market plan. I still took a trade from my bed just because the setup was just so perfect. I was like, we're definitely about to short this. But anyway, what was my thought process? Okay, so you guys can kind of get an idea. The thought process for me was literally, ladies and gentlemen, when I tell you this, I can't make this up. Right? If I go into this pre-market plan, it was literally the same plan except for the range. The only difference was the range was changing. The range was actually coming lower and lower, right? So I want to talk about like things that you should have been noticing, right, coming into the week. If you go all the way back to our top-down analysis, right? Let's go all the way back there, right? Go back and watch the top-down analysis. And this is important because so some people will say, well, that's in hindsight. It's like, no, we talked about this last Saturday, right? I said, look, every day this week since we've been up here inside of this major premium, every single Sunday we open up, gap down, open up, gap down. Every time we gap down is to go back up. We gap down to go back up. We gap down to go back up. Okay. So my thought process was every time we gap down, we're putting in the low of the week, but we're not breaking the all-time high, right? We're not bringing new highs. So we're consolidating because we're not bringing new lows and we're not bringing new highs, but the aggressors are the sellers inside of the consolidation because they continue to gap price down. A lot of other people see it and they say, well, the bulls are buying it back up. They're just going to go to all-time highs. I'm like, yeah, that's a possibility too. I'm not counting anything out because the market will market, right? But at the end of the day, we know that there's a 70 to 80% chance that when the market opens up on Sunday, aka Tuesday, true week, right? Monday or Tuesday is usually going to bring us the low or the high of the week. That being said, something that I said inside of the top-down analysis you need to pay attention to, which was I was specifically waiting for Sunday to open and trade up, right? I've seen it trade down 3 weeks in a row. I'm waiting to see Sunday trade up. Right? And we go all the way back to Sunday open, right? Remember, this is a shortened week, but we opened on Sunday and look, we finally traded up. I posted it in the Discord. I said, we've traded up to come down. The moment the market opened, I said, up, gap up. Finally, we should be trading up to go down, right? I didn't know how long this would take or whatever, but that was the thesis. That was the bias. Doesn't mean you can't long the market up here. It just means that my overall bias up here is very, very bearish. I bring that up to say one thing. Since Monday, the high of Monday was 757, 44,757. Since that day, you could just draw a line up here. I'll just put my cursor up there. Since that day, since Monday, we never saw that level again, which tells you no matter how bullish you are, if the market cannot break back above 44,757, we're headed one direction and it's down, right? Now, again, I say that to say it doesn't mean you can't take longs because this is a great day to long the market on Tuesday, right? Back up into this structure. You just better not be in past, the 700s, right? That's when it gets really bad for the bears. All right. So knowing that information, this was my plan on Thursday. I was looking for a break and retest of the low of this range, right? Break and retest of the highs or the lows, or look to trade inside the range. We got a straight dump candle. This thing dumped all day. I think it started like in London session actually, yeah, because this is the 6 a.m. So this is started at like 5:50, right? 5:50, this dump started, right? And then it continued all day long, right? At 2 p.m., we started to rally back up. And by guess what? The same exact time. I can't even make this shit up, right? I'm gonna go down to the 15 minutes so you guys can see this, right? This little things like this is like, man, like if you're catching this in real time, you can make so much money, right? Okay, so let's come down to the 15-minute, right? Over here, the market came up at 6 a.m. and immediately put the high of the day in and then sold all the way down until 12 o'clock, okay? If we go to that same exact time, 6 a.m., the market did the exact same thing. Like, I cannot make this up. Like, it did the exact same setup, right? Put the high of the day in at 6 a.m. I took shorts at 44,306, stops above 44,030 because that's the height of the range, right? Like, if you're gonna stop me out, I want you to go higher from there. And I mean, this thing just straight bled out. I think I netted like 260 points. I could have held it all day, but I was tired. I was ready to go back to bed. I mean, this thing was just straight flush session, right? Now, on a day like this, right, what you should note is, number one, it's Friday, right? And the market has not displaced toward any of the weekly projections if you mark them on your chart, right? Like, I mark them obviously because I do the top-down analysis, right? Like, that's what I do, right? And when we started dropping from here, the reason why I debated not closing this trade before the open, because I'm looking at this and I'm like, man, 43,573 sounds like a stretch, but this is the 3% goal or the 2.61% goal of the market. I could hold for another 400 or 500 points, but that would be crazy, right? Apparently it wasn't crazy, but I didn't hold it because the market broke this low or broke the low of the PM session, came back and retested it. If you look back on my pre-market plan, this is the setup that I'm always looking to take, right? We closed below the low here, right? We came back up and barely retested it and dropped lower. Here, we closed below it, came back up and retested 50% and kept continuing to drop. I mean, we bled right through the end wall, went right to our weekly projection, which was 43,573 from 44,733, which is exactly damn near to the tick where we dropped from, right? And then we ended up falling right in the middle of our other weekly projection, which was 43,325, right? We ended up we closed above this, but our low of the day was 43,418, right? That just goes to show that data works, right? I'm not saying this to brag. I'm just showing you guys, like, look, you can play off of this shit once you understand which way the market is going. Remember, if you want the market to go down, you want to see it trade up first. If you want to see the market go up, you want to see it trade down first. And you can use that logic, whether you're in once you're in premium or discount, to provide somewhat of a bias for you going into the week. All right. So let's move over to the S&P 500. And I wanted to highlight Trading Yoga Girl's plan because, again, I didn't make a plan for it. She makes a really good plan. It's very identical to the way that I make my plans. Very, very clean, very neat, easy to read. This is what I love about, you know, when you have a system, you can pass that down to other people and they can make it their own system, right? She doesn't make the plan exactly like how I make my plan, but she has a formula that works, right? So big picture, bullish, small picture, bullish retracement. Macro, overnight, we chopped around on top of 6130 to 6140 range. Our range is even tighter with futures settlement at 6136 and futures weekly at 6132. We are finding 6140. Remember, look, just read her plan and see how many times she references 6140. It's crazy. We are finding 6140 being our new resistance. We would either break out above to supply or stay back in the range until we break 6127 pivots. Look to short the higher of the range and short the lows. Top of the range, 6130 to 6140. There's another reference. The bottom of the range is 6109 to 6117. Bullish plan. Look for failed breakdown into either 1 hour support at 6102 to 6113. Break of the range is 6103 to 6117 to target 6121 daily pivot area at 6130. And then the top of the range is 6140. Bullish, look for buyers to defend 6052 to 6089. I had the exact same levels. That was a 4 hour demand zone. looking to target 6095, 6102, 6103. I literally took this exact same trade without a pre-market plan, but because I already chart everything the same way, I took this exact entry right here. But bearish, look for 6140 to continue being resistance to target 6135, 6127, 6120, 6109 through 6117, and then 4-hour support. If you go back and look at the chart on the S&P 500, guess where she got short? She got short 6140, right? Not because it was 930, no, because price was at 6140. She's told me multiple times, she said, hey, I think I'm switching my time to start looking for trades to 850, 910, because that's when I'm seeing the setup. I said, yeah, because look what happens when you wait till 920, 930. I mean, this thing is dumping now. It's not waiting on nobody to open the market. It don't care, right? The second it can start, dealing those orders down, it's going to start doing it. The market doesn't care about, 920, 930, right? The market cares. Futures market is 23/7. So whenever they feel like they want to dump it, they can do that. Usually they wait till they generate enough liquidity, which just happens to be around opening prices, right? London open, New York open, but the true New York open is not 930. That's what a lot of people don't understand. The true New York open is actually 7:30 Eastern, right? So when people say, oh, I don't trade to the opening bell, I mean, that's cool. I ain't knocking you for it. I'm just saying you really need to understand the opening bell was 2 hours ago. It wasn't at 9:30, but that's food for thought. But anyway, she got entry short at 6140. Stops were above, I think she said 6144, 6145. She wanted out. I mean, and she hit every single target that was on her thing and more, right? Like she could have got all of this, but look at this, right at 6089. I took the loans right off of here. I think I got loan like 6092 or something like that. Wrote it up, took some profits at 6102, and we just could not break any higher. And that's when I closed everything. I said, man, I'm done, because I think this thing is about to do something dynamic. But the trader that I am, a reversal trader, if this thing was going to continue to dump, I had to leave, because you already know what I'm going to be trying to do, right? I'm going to try to long this thing the whole way down. RIP to the motherfuckers that was trying to long this shit. I know they out there, right? I know they out there, right? RIP to the accounts that were trying to long this thing. All because I guarantee I'm not the only person that trades supply and demand. I'm not, right? So I guarantee every supply and demand trader was like, but we're in demand, but we're in demand. This thing was just dumping. It was bad. And then ICT traders was like, but it's an in wall, dump. They're like, but it's another in wall, dump. You know what I mean? Like, this was the type of day that you had to understand the context of the market. The context was, we set up in this consolidation, right? And I've been saying it for weeks. I said, we've been in this consolidation for 12 weeks, right? Whenever this consolidation breaks and it becomes expansion, whichever direction it expands to, you do not want to stand in the direction of it, because there is a lot of orders that have been accumulated up here. And if the direction is down or up, right, that expansion may last for a while, right? I'll give my thoughts on the overall top-down analysis thesis going into tomorrow, because that's a whole different subject when we talk about the full picture and the full dynamic of what just happened. Because I mean, ultimately, the Bears really didn't accomplish anything. Like I get it, it's one big ass candle, but I mean, so is this. I mean, they really haven't accomplished anything. Like, if I'm being real, until these lows break down here, like, all of this is just play history, right? That's all they doing. They just playing, right? So we'll see what they really mean, in the upcoming weeks, and we'll focus on that as well. Moving over to the NASDAQ. Again, the NASDAQ was very, very similar to the S&P 500 and that of the Dow Jones. Again, if you guys haven't traded the Dow Jones, you should at least look at the damn instrument, right? Because it tends to give us a preview of what's happening. If anybody was up, and I think Mike was up because he posted it in the chat. He said, hey, yo, YM took a poopy doopy, right? Like, in pre-market. That was a what's that word? Like, that was a warning pre-market to what was about to happen, right? There's no way, right? Like, there's zero world that exists right? Except for that 1 week where we got that United Healthcare scare. But for the most part, there's usually not a world that exists where the NASDAQ or the Dow Jones is going to open up down 1% and the rest of the market just straight up rallies from the highs and goes and hits all-time highs, while the Dow Jones is climbing, is going lower and lower. The reason for that is because a lot of these stocks that are in the Dow Jones are also in the S&P 500 and are also in the NASDAQ, right? Just in a lesser capacity on the NASDAQ, right? The only difference is the Dow Jones only has 30 stocks in it, right? They call it the US 30 for a reason, right? There's only 30 legit stocks. This doesn't mean there's only 30 positions in the US 30. It's actually just talking about the stocks, right? But there's other sectors that are in there that make it up. But anyway, my point being is when you see something happening in pre-market to a different instrument, I'm not saying you should just be like, I'm automatically going short or long, but you should definitely heed to the warning, because the NASDAQ or the Dow Jones dropped at 550. The NASDAQ and the S&P 500, they waited till 850, but once they started dropping, oh my God. A lot of people were probably trying to get long inside of 1050. I did myself. I had a level there. I got long, but I got out, right? Like once I realized like, hey, this ain't trying to break 6102, I'm leaving. But a lot of people didn't leave, and then it was just night time, right? And if you guys remember, I've been talking about these back-to-back stacked up NWOGs from the 27th of January to the 29th of December, and I continue to leave them on my chart because somehow, some way, they keep playing a major role in price action. The market comes down here, we tap back into these weekly NWOGs, we drop below it, and now we're using them as a resistance again. So that's the reason why I keep flickering them on and off, and I'm not deleting them, because guess what? We're about to create another NWOG on Sunday, and it's literally sitting right next to the previous NWOG that I've kept on my chart for quite some time. Ultimately, it was all straight downhill on the NASDAQ, the S&P 500, and the Dow Jones. But I think more importantly, you have to take a look at the last instrument, which is the volatility index, right? The volatility index was the key indicator that should lead you to believe that this thing was going to continue to dump. If you don't follow the VIX, that's fine. You can at me in the chat at any time and say, hey, Hobbs, what's the VIX looking like, right? Or, you know, if I'm in chat, obviously you could just look at my screen, right? The reason why I say that is because if you see selling, right, and the VIX looks like this, right, like just, you know, choppy back and forth, then the market's probably going to be choppy back and forth, right? So it's okay to look for the opposing party to take advantage, or, you know, to take back over. When we was in that range, this is all we was doing. Back and forth on the VIX. But once we broke out and we broke this high above 1734 and we kept going, it's a wrap. You cannot look for longs. I mean, you can. You do whatever you want, right? But you can't look for longs to continue, because if this VIX is pushing, it is the one indicator that will not lie to you, right? It's not delayed and it will not lie. It is a direct reflection of the options chain. And if you don't know about the options chain, the Qs and the S&P are literally derived from the options chain. If the options chains are selling, it's a gamma squeeze in the opposite direction, right? You do not want to be on the other side of a gamma squeeze. And that's what it was today. It was basically just straight liquidation on Friday. So those are my thoughts on the market review, guys. Again, I didn't make a plan, but I did want to come over here and give you guys the market review. But that's all I have. My name is T Hobbs. I'll catch you guys on the next one, man. Peace.